Stavros Tousios, so Info Markets. Today we're going to have a quick look at two minor pairs. Well, one is considered to be major, really, Kiwi, and also GBP against the Aussie. Now, when we look at Kiwi, we have a clear trend to the upside. Okay, we have a clear divergence up here and a move down at the 38 Fibonacci, which is typical. And we are seeing a move to the upside that actually could be the one that it's going to leave us with the bottom in, right? For that, of course, to play out, we need to see further upside above the 63 cents. Maybe we're going to get a pullback, and then of course further continuation towards the 63.89 and above that, and then of course the previous peak. I don't see any sort of divergence over here, but we do see a divergence as we come down. This is a bullish hidden divergence, which suggests that if I would probably call the 62 level holds in a potential short-term short, then we could be looking for further upside towards the 63 cents. But in case we do lose the 50%, we're going to invalidate, of course, most likely this RSI hidden bullish divergence and see further continuations to the downside, with 6180 becoming a critical level, because losing 6180, it's going to increase the chances of continuing to the downside much more. First of all, we have this channel that is not much helpful at the moment because it connects the previous highs of the base. The next one is over here. And as you can see, it's exactly where we stopped currently, okay? Now, whether it will fall below or not, it's not clear. But in case this level holds, this is going to, of course, increase bias to the upside. And then we should be looking really these, which is the 50, as you can see here, 62.21, going to hold. And in case we do hold the 62.20, then that should have bulls try another time for further upsides. Now, when we look at GBP against the Aussie, we have had a clear downtrend. We have broken above that over here. We've had a retest of the 38 as a support and further continuation up above the 61.8 and near to the 79 above the previous high as well. And that suggests that there could be further continuation to the upside. Okay. We also have a bullish divergence over here, hidden bullish divergence signal, and the 50 so far, the 50 holding. However, because all of this leg from down here up here broke the 61 in its first attempt, broke above the previous high in a false break attempt, of course, but above that high, there we could see further another leg to the downside around the 176. Who knows? And that could be actually even like considered somewhat of a head and shoulders, if you may, and then further continuation to the upside. But because we don't currently see a 4-hour divergence over here, right, we could actually go up as long as we remain above the 50. And that's why we're looking at this, because the 50 seems to hold, the 38 seems to be a good support. The levels are respected. When the levels are respected, there is more chances that the market moves are going to be a bit more orthodox and as expected. Now, the 1 hour, we do get the divergence. Okay, and if we do get the divergence on the 1 hour, then that means that we should really see where exactly we are on that end. Look, we have a very good cluster at 176.26. So once we get there, and if we get there, it would be perhaps an ideal position to start looking for signals that suggest that there is going to be an upside move. On the other hand, you know, maybe we're just going to stop over here and continue higher from there. But it would be a better case to kind of wait and see what happens in a potential drop. Okay, let's not forget that we currently are in what seems to be an actual correction to the downside. We have exited this trend to the downside, which means we are seeing a slowdown currently, which suggests, okay, that we might start looking at a potential pullback soon. That could be with a fresh low or without. The fresh low is also going to give us another bullish divergence signal on the RSI.